Good morning, everyone, and welcome to our keynote presentation for the LSX World Congress 2021. Thank you for joining us this morning. I'm delighted to be kicking off the whole event with this session this morning titled The Biotech Wave, Where Do We Go Next? Though the presentation does incorporate biotech, medtech, and digital health innovation as well, and some stats and numbers around financing deals, M&A deals, and various different things that we've seen in 2020 and some plans for the future. So delighted to be handing over to Jorge from McKinsey, and Alexandra Zemp will also be presenting a little later on. But for now, over to you, Jorge.
Thank you, Josh. Welcome to all of those joining today. Good morning, good afternoon, wherever you are. It is a pleasure for us to be here today on behalf of McKinsey. As Josh mentioned, I'm Jorge. I'm a partner in McKinsey's Swiss office, and I lead our McKinsey's biotech practice. I'm joined by my colleague Alex Zemp, a partner colleague also from our Swiss office. In the next 30 minutes or so, we would like to share with you some of the latest insights that we have starting the year with regards to our biotech industry. As many of you know, we have generated insights and knowledge from our vast work across the healthcare space over the last decades, really. But also in the last 5 or 6 years, we've become much more involved with the biotech side of the industry. Obviously, we're very excited about what we feel is truly the innovation engine of many of the elements in healthcare, especially in pharma. And obviously, the insights that you're going to share that we're going to share with you are reflections on those experiences of serving many of you as consultants, but also partnering with many of you as human capital investors. So today we will focus on three topics to share with you. One, I will take you through some of the facts that closed the year of 2020 as an unprecedented year, not only for us as humans, but with a special focus, obviously, on the biotech industry. And then we're going to tell you a little bit about how the year has started, how some of those trends from 2021 are carrying over, and how the industry is being buoyed. And then Alex will tell us a little bit about what fuels that growth, not only in 21 but beyond. And then we'll wrap up with some of the things that I think are top of mind for a lot of you, and that we feel are going to be key topics in 2021. So let's start by looking at the sector in 2020. As I mentioned, 2020 was a unique time in our lives. We spent all of the year now, also again into 2021, basically balancing between two imperatives, right? One of safeguarding our lives, first understanding the virus, then testing it, then eventually getting to vaccines. And obviously, one can debate if it's going fast enough or not, but clearly the vaccines are starting to have an impact, with a lot of other treatments and therapies coming along the way. And at the same time, we've been trying to safeguard our own livelihoods. Obviously, getting back to work after the spring and early summer of 2020, and trying to somehow recover the economies, which obviously has proven a challenge coming into 2021. As some of you might be familiar with, throughout 2020, we've been actually taking the pulse with about over 2,000 senior executives to try to understand where things are going to land from a broader economical perspective. As I mentioned, some of you might be familiar with these scenarios in which we basically bring, how we will handle the virus together with what will be the economic effects on the y-axis and x-axis respectively. And so there are several scenarios to getting out of this crisis, but what you can see is, as you saw through 2020, there is a realization, and just a little bit above a third of all those senior executives do believe that we're going to have a very slow recovery that is somewhat jittery. And then between the scenario in the middle and the one immediately to the left, you see there's a bit of opinion around whether it's going to be a bit faster, a bit slower, but it's not gonna happen anytime soon. In fact, if we look at some of the latest data in our region, again, just to baseline us on what's happening, for example, in the Eurozone, you see those two scenarios in the blue lines. This is how we would estimate GDP in local currency to progress. You see that, obviously things went down. Q3 was a great quarter, obviously from a lower base. We don't have final Q4 data from everywhere yet, but obviously things will go down again. You see that the recovery is very low. And between these two scenarios, yes, probably some growth this year and in 2022, but generally an economy that is suffering. Now, biotech has been on a different trajectory. If you look at share price evolution across different regions, you see different stories. This is the line for China. China actually grew in terms of share prices quite strongly, with only a very little blip in the March-April 2020 period. If you actually track the US, also some growth after the blip in March. Now by February 2021, up about 37% from January 2020. Europe, our region here, has also fared relatively well. Actually, if anything, a little bit better than the US after the blip in March. And all of this has been above the general line here, using S&P as a reference, but to show that indeed biotech has been faring well, for example, from a share price perspective across the regions, and at least double that of the rest of the economy. What you also see is that this is basically a chart that uses one metric, in this case, shareholder return. We could use economic profit, etc. The picture would be very similar. But this is essentially how the different industries grew throughout 2020. And obviously, there's a lot of industries that actually went down, transportation, etc. We know those. But what you can see in blue is the healthcare related industries. And you see that biotech is actually among the best performers in 2020. And as I mentioned, here we're looking at shareholder return, but we could be looking at other more revenue associated metrics. Those would also be showing a similar picture. So clearly an industry that has only gained speed versus a difficult broader situation. A lot of this has been driven by an absolute record level of investments. So if we look worldwide, the differences that I'm showing you here are the differences between what was raised in 2019 and what was raised in 2020. You see that VC funding worldwide went up quite significantly, and we're inching on the 40 billion. Different types of deals, and here we're bucketing acquisitions, JVs, co-developments. Again, massive growth throughout the year. And if we then separate out IPOs, even more so, right? So we basically had a 3x growth in total amount of money raised through IPOs. So a picture of exceptional growth and exceptional investment. Let us look into some of these deals in a little bit more detail, so that we also share a view of the different dynamics between the regions. This is a worldwide view. So let's maybe take a look just briefly at VC funding, right? As one element of raising in the industry. So what you see here are essentially three lines. You see the total growth in billions between the US, Europe, and China. You see the average funding size. So telling you whether the deals have gotten bigger or smaller, in the level of activity of the funding rounds between the regions. And I think what you can see is that, of course, VC is growing everywhere. But if anything, Europe has actually become, if anything, more active even than the US. And what you can see is that also the mean funding size for VC deals in Europe actually grew quite a lot, right? So what you can see here is that there's not only a lot of activity, but Europe seems to be thriving, if anything, a little bit above others, at least from what it was in 2019. If we look at those new deals, and again here we're looking at acquisitions, JVs, etc., in looking at more or less the same metrics, you actually see that here the growth was driven by some 60+ billion addition in deals driven from the US, with an average mean deal size growth very similar between the two regions, a little bit less in China, but obviously China is starting from a lower base and growing very fast in the number of deals. So the deals have gotten bigger. The US continues driving, and China is also going fast. And then the last bucket, as we showed before, if we look a little bit deeper into the IPOs, here again, obviously the US has historically been very strong. It added more delta in 2020. Europe a little bit less, with China catching up speed, as I'm sure a lot of you have been aware from the various news. So this gives you a little bit of the flavor that the growth is general. It's driven by slightly different sources for slightly different deal sizes across the regions in 2020. You're probably a little bit numb by numbers at this point, but I'm just going to put a few more on the screen, because this is just looking at January, right? So if we thought that everybody went for Christmas relaxed and everything was back to normal, no. January is again extremely strong. Whether you look at VC, whether you look at different types of deals, whether we're looking at IPOs, the trend continues and the acceleration continues at very high levels compared to pre-crisis January 2020 last year. Before I pass on to Alex, maybe leave you with a couple of different things that are happening that I think are noteworthy in terms of driving the industry. In 2020, many of us saw the strong emergence of special purpose vehicles for acquisitions or SPACs. This is a picture that was just published recently in the Wall Street Journal, that basically shows you every bubble is basically one of these SPACs, right? And as we see, the number of SPACs available has grown quite dramatically over the year. Just to give you an idea, that pre-2020, there was maybe 2, 3, 4 of these every year. In 2020, there were 80, and now they're continuing to grow in some industries, including healthcare. Of those SPACs that actually led an acquisition in 2020, 2021, several of them, here we're mapping 18 of them, are actually associated with healthcare. In those that have gone public, about a third of them are actually being used to reverse merge existing biotechs, with a lot of activity in December or January. So lots of SPACs out there, lots of activity, and this essentially constitutes another vehicle to add to all the deals that we've just discussed and are available. Let's maybe not forget about Pharma, right? Pharma, this is, I'm not going to go through the details here. Happy to share this with the community. I mean, we've published this paper earlier, but this basically is a calculation that looks at the cash, the debt ability, and the cash flow that has been generated within large pharmas in 2020, and assuming that there's some committed outflow, This means that the pharma industry is probably sitting on something close to another 200 billion of cash for investments, which of course will drive a lot of the deals that we saw, but is an important source of investment. Again, 2021, very high numbers, but still quite a lot of dry powder to go out there. And so just to finish off, maybe leave you with this thought that it might indeed be that biotech is perceived as a safer haven for investors as other industries struggle across the overall economy. But one thing we notice when we look, for example, at different indices, the general NASDAQ versus the biotech NASDAQ versus S&P, what we see is that the growth of biotech is not something that just happened in 2020, right? It's an industry that slowly but surely has elevated the baseline and has its own dynamics. Even when you look at the period 2021, the curves don't look exactly the same, or the trends of the curves don't look exactly the same. So there's an intrinsic dynamic in biotech that I think is getting more and more understood, and it's not just a quick growth in 2020. We believe that has not only to do with the fact that other industries are struggling and investors are coming more and more into biotech, but also because biotech has some fundamental ability to impact and add value, as we saw with mRNA, especially because of all the technologies and all the exciting areas that are popping up as we speak. And I think to give you a little bit more insight into what's driving that, maybe Alex, I pass over to you.
Super. And I'm going to talk a bit deeper about what is the science and innovation that is actually potentially a core of why the industry is also doing that well, right? And I think I'm thinking about it in three different types of innovations. If you're looking at it, right? First of all, there is this fundamental biopharma innovation, as we all know it, that just continues, right? I think there's a second element, which is a bit of this convergence of molecules, software, and hardware innovation, which is a bit starting to blur the lines between pharma, medtech, and health tech, where, of course, the emergence of health tech plays quite a big part into it. I think third, there is just so much more that can be done with biology, which I would call the bio-revolution here. But let's look at the fundamental innovation first. I mean, if you're looking at just the pipeline of biotech and pharma and what they have in terms of biologics in the pipeline, we see that just the pipeline continues to be full and is continuously growing, right? Particularly if you look at the early stage assets here, phase 1, we see that there's a growth of 12% per annum projected. So there's no sign that actually the biopharma innovation is going to stop anytime soon, if you look at that. Now, if you look at what type of innovation is driven, which is, of course, small molecules still playing quite a big part, right? It has been historically, but you see that actually the small molecules are growing just at the rate of 5% per year. If you look at the next wave of innovations around molecular antibodies, but then also the even next level around mRNA, around cell and gene therapy, and so on, you actually see that these novel modalities are growing with a CAGR of like 16% per year. So just looking across it, right, there's an exciting science coming all over the place, and it looks exciting. Now, if we quickly go beyond biologics, there is the second wave of innovation I mentioned with this convergence of pharma, medtech, and health tech. And there is a growing body of evidence, including publications and peer-reviewed journals, that digital interventions can actually improve health outcomes across a range of therapeutic areas, right? The opportunities are quite broad. And I thought the best way to illustrate is actually what you see right now on the page is how health tech and digital analytics are actually entering the healthcare space. And there are, of course, many, many use cases from optimizing R&D processes down to optimizing financial management. But I think particularly if we think about health solutions that are providing more effective therapies, we see quite a blurring of lines between software, hardware, and molecules, right? And particularly if you take digital therapeutics for an example, which is highlighted here, I mean, there were 40 digital therapeutics companies that got invested into in 2020. And I think while the number of products that are making a treatment claim is still relatively low, there's clearly an area where digital is converging with pharma offerings like cognitive games, cognitive behavior therapies, and so on and so on. Now, if you look at these numbers a bit in the bigger picture, right, this is giving you a bit of a view on where do these different areas land in terms of more technology-driven versus scientific-driven, vis-a-vis like, is it actually optimizing current value or is it creating future value? And if you take the first part around finance and operations, this is much more on the technology side, and it's more optimizing actually things that are there today. If you're looking more in the area of care delivery and digital therapeutics, adherence therapies, and the things I mentioned, they're probably somewhere in between on addressing current areas versus kind of creating value that wasn't there before, right? And if you just look at the number of providing more effective therapies, which includes like the digital therapeutics, but also all these adherence solutions, it's estimated to be a market of 20 to 30 billion by 2024. Now, if you look at the other applications like screening, diagnostics, R&D, and then also like a completely new area of wellness and lifestyle solutions, you see that there's just a lot of value being added and a lot of opportunities coming to play. Now, there's so much innovation in this digital space that I just wanted to highlight one question for all of us to reflect on, right? Of course, traditionally, if you look at biopharma, we have been focusing pretty much on innovating therapies. But if you look at this full ecosystem that you see here, there's of course a question on, do you just want to focus on the biopharma solution, or is there actually a broader role you want to play or where you want to contribute in this ecosystem? For me, what I just described is just, for me, an interim step towards this overall bio-revolution, which is this third wave of innovation I mentioned earlier, which is mostly driven by two pieces, right? We have a lot of innovation on the biological science. And secondly, I think technology is kind of entering the phase of the space of biology, if you want. And you could say there are like around 4 areas of innovation. There is like biomolecules, which is about mapping, measuring, engineering of molecules. So everything on this omics revolution that is coming to the market. Biosystems, which is all about the engineering of cells, tissues, and organs. Biomachine interfaces, which is about the interface between biology and machine, or as probably science fiction books would call it, it's all about cyborgs, if you think about the link between technology and humans. And lastly, biocomputing, which is like using the cells or molecules such as DNA for computation. And my favorite fact around that is that the storage density of DNA is about 1 million times that of a hard disk storage, which is like technically around 1 kilogram of raw DNA could actually store the entirety of the world's data, which is quite impressive if you think about it. And perhaps a quick excursion to history is that this revolution, of course, started decades ago. And this like 13-year effort to map the human genome was actually a foundational building block. But the power of it revealed actually when it became cheaper and more accessible to people to use genomics. To better understand biology. And you see here actually on the chart that the cost of per human genome for sequencing has decreased much faster than any law would have anticipated after the first sequencing happened. Now, if you think about what does it mean in terms of applications, right? Number one is, of course, you can use biologics to produce a large share of the global economic's physical materials, right? Potentially improve performance, sustainability. I think for me, the simple story there is, if you think about fermentation, which has been used for centuries to make bread or brew beer, is actually now being used to create fabrics, such as artificial spider silk. I think the second one I don't need to mention a lot around, right? But of course, given that we understand molecular biology so much better than we have in the past, it just allows us to be much more precise on how do we develop drugs, where do we target, and heading into personalized medicines and precision agriculture. I think the third one is, of course, the ability to engineer and reprogram our organisms, which is gene therapies that could complete cures of diseases, also going into agriculture, crops that are genetically modified and engineered, and so on. I think fourth, it's all about new methodologies using automation. And there we use everything, thinking about like optimizing R&D processes, optimizing throughput, discovery, and so on. And lastly, of course, is the application in any kind of biomachine interfaces like neuroprosthetics that enable signals from the brain to control physical movement. And if you think about this, all these applications just have massive potential, right? You may recall this picture from our presentation in the festival in November, which is just impressively showing that 60% of physical inputs in the global economy could actually be produced using biological means, right? Which is kind of the combination that 20% are already biological materials like wood, paper, agricultural products. And there are 40% of physical inputs that are not biological materials today, but could actually be produced using innovative biologic processes. And taking this together, right, we could imagine that there is just a significant impact in multiple domains beyond human health. I mean, human health is relatively clear, and that many of you are probably aware of the pieces around cell therapy, gene therapy, RNA treatment. There's also areas around anti-aging treatments that could be developed on extending lifespans, innovations in reproductive medicines. I think just if you look at that, the direct annual global potential impact of this is estimated to be 0.5 trillion to 1.3 trillion over the next 10 to 20 years, or basically 35% of this biology innovation overall. And perhaps just picking one other example here, right? You can see the applications in agriculture and chemicals. But if you look at consumer products, I think there's also a lot of innovation space opening up around personalized products based on biologic makeup of people, direct to consumer genetic testing, innovative approaches to wellness or fitness. Not only thinking about humans, but actually also even thinking about pets of people. So just to giving you a sense that there's just a massive amount of additional biological innovation to come with, I think, paired with technology, is just super promising for our sector. And I think probably summarizing on that, right, I think these three waves of innovation are coming. I think we are all very much aware about the biopharma innovation that many of us are living and breathing day to day. But I think there is the next wave coming with more health tech entering the biopharma space, and then the pure revolution of how biology is used to the next level.
Thank you,
Jorge.
Thank you. So to wrap up, what we've talked about is an industry that is getting resourced to actually meet its revolution waves, as Alex called it, in the next few years. Obviously, all of this creates some challenges to what you as leaders will be facing, and certainly has a lot of complexity. And it's critical that the industry leaders, be it founders, CEOs, investors, etc., consultants, actually understand that all of this opportunity also creates critical elements for you to act on, to deliver on, to actually unlock this value. three things that we would just leave you with. And again, this is based on our own experience working as consultants to the industry, but also as human capital investors in the industry. Number one, all that Alex talked about means that there's growing complexity. There's different applications of the products. Probably a couple of years back, we wouldn't imagine that mRNA products would be produced at the scale that they're trying to be produced by everybody helping each other in the industry. In this, of course, as you keep adding modalities, as you keep going into areas that are unknown in terms of supply chain, production, etc., there's going to be quite a lot of challenges. And these challenges go beyond the fact that something like the pandemic disrupts the global manufacturing and supply, but it also means that there's simply a lot of challenges that we haven't faced, and we probably need to solve it in an accelerated fashion. And a lot of these things are not that far. Then what we're also seeing is, and I think Alex illustrated it very well, is that there's a lot of technologies, they're interchangeable. A lot of them are purely biologic. A lot of them are digital. A lot of them are somewhat in the interface. And the fact that you can rapidly interchange technologies means that, a linear view of I'm at this point in the pipeline, the other guys are behind me, the other guys are in front of me. I kind of know where this is going. It's becoming a slightly more complex function. And as you saw from the first section of our discussion today, there's a lot of investment. There's a lot of interest in the industry more broadly, including health tech, etc., which is obviously also a topic of this Congress of LSX. In this basically brings a lot of people that have very different perspectives about the industry and with highly variable degrees of knowledge. So managing this complexity as leaders, we think is a topic that is just going to accelerate and become ever more prominent in 2021. The second one that we would like to highlight is the challenge of developing and commercializing, right? Not just developing, right? So we see more and more of the new launches, for example, of biological products that treat specific indications are actually being launched by the developers themselves. So biotechs moving into the commercialization space, oftentimes propelled by the excitement, propelled by the investors, et cetera. What is important to notice is that while 30 to 40% of products now come from smaller companies, biotechs that are often launching the very, very first time, these companies, probably for good reasons, struggle with the launches. Whereas about half of the launches of the large players are, we can call them successful, i.e. they beat the expectations. That number is only about 40% for first-time launchers. But then those first-time launchers typically fall about 40% short of the full potential of the product, whereas the large pharma companies tend to be falling below a 10% delta to what is expected. So very, very important challenges to actually become a commercializer, not a developer, or only a developer, which has been the more the traditional role. And I think the third one that we would highlight is the talent challenge, right? Obviously, if you're starting if you have to commercialize, right, or if you're excited about bringing it to market, the talent that you need to attract is very different and is very highly competed for. For example, one of the elements that we see is how late market access comes into play when it's a biotech doing its first launch. And that is very critical. We know that that's very critical for successful launches, but that's very difficult to compete for that type of talent. Analytics, the use of real world data, etc. This is something where 2020 showed us that companies that do that, small biotechs, pre-commercial biotechs that do that, can become very successful, and if they find a smart way to use analytics. But again, the access to data, the ability to have the talent that actually handles that data is not something trivial for biotechs, and we feel will continue to be a challenge. And then, of course, with all this investment, with all this success, even competition for R&D talent becomes ever higher. We saw the number of R&D hiring through the BLO data from the US in 2020, whereas of course the rest of the economy was going down. R&D talent was being hired at probably unprecedented scale. And of course, depending on where you are located, the US, Europe, China, somewhere else, you have people with exactly the same interests as you competing from different regions. So we feel that this is going to be the third challenge for us as investments continue and as the excitement around science keeps growing. We're close to time. I wouldn't want to finish without thanking LSX for the partnership and going deep into some of these topics, and obviously all the sources and all the colleagues in the industry that continuously help us to reflect on these areas. We would like to thank you for joining this session. We hope that we shared the excitement and the perspective that this industry is not just a 2021 industry, but there's a lot more to come. We look forward to engaging with many of you in 2021 and beyond to make it a reality. Josh, back to you.
Fantastic, thank you, Jorge. So yeah, we do have a few minutes for questions. So Jorge, if you could stop sharing your screen and we can get to a number of these. A quick note, we have quite a tight sort of timeline this morning, but I'm sure we can get to 2 or 3 of these questions. The presentation will be immediately available on demand afterwards as well. So if anyone has any follow-up questions after watching it, or I think some people may be having some small issues with their sound, it should play fine after we come back with that sort of immediately recorded session. So we've had a number of questions. I think some of these, I think Mark, thanks for your question. I think maybe that's better suited perhaps to the health tech leaders stream, which will be kicking off shortly in another track, and some better sort of experts on that particular topic. But I guess one that sort of lends one of the beginning parts of the presentation, Jorge, is around the IPO market. And I've had a question that a lot of people think this IPO market is a big bubble. And do you think it's set to burst at some point? And if so, when? I was on a panel prep call for one of the sessions we have tomorrow, where someone said this isn't so much of an IPO window as an entire missing side of the house at the moment. And with all these SPAC deals and things like that, I think that's a question on a lot of people's minds. So what's your perspective on that? Do you think this is a bubble? And if so, when might it burst? I'm not sure we can hear you.
Sorry, thank you, Josh. Yeah. Let me just preamble the answer, the quick answer. I'm not going to speculate on bubbles or not bubbles, right? I'll leave that to the community that does that. Clearly, the increase is unusual, right? We saw the numbers; they're just off the roof, right? What I think is notable is that SPACs, for example, don't get filled from one day to the next. I would argue that a lot of these SPACs bring people together that are actually traditional biotech investors and healthcare investors, which have some level of sophistication and understanding. Clearly, the numbers are too high. Clearly, they cannot keep growing. Clearly, SPACs will be filled, but these things take time. I think the interesting thing, Josh, is that it's not just the public money that is just growing, right? I think another fact that we need to pay attention is that the dynamic on the IPO keeps being the traditional one: US faster, China catching up, Europe going a bit slowly. The third fact that I would highlight is that money is flowing in different channels. There's deals, there's co-development, there's JVs, there's VC involvement. These are all long-term engagement with those assets, right? So I would just put those facts in the table and not just say, oh, now I have a lot of money, therefore there's a bubble and it's going to explode. I would just say that there's a lot of excitement that is not just IPOs. And then, as Alex mentioned, this is not just a lot of mRNA companies that now need to get financed. I mean, we're going all the way, if Alex has her way, to start putting all the data of the world in 1 kilogram of DNA, right? So the spectrum is so large, right? That as long as people handle that complexity that I was mentioned, I think there's an opportunity to find a home for all these millions in a sustainable way. I hope that helps.
Certainly. And another question more on the sort of deal side is around M&A. And someone's asked, we didn't see too many, mega deals or huge deals. The volume was there, but maybe not in the size, and particularly around what's normally a very busy week in the beginning of January around JPM. Relatively quiet for the sector, but obviously all this capital's flowing in. So what do you think of the drivers behind that sort of slowdown, perhaps, of the larger deals and M&A deals?
Yeah, I mean, let's my reflection, Josh, would be, let's call it by the time we're in December this year, because what you see is that, of course, things flow in different months in different years. Obviously, January is an announcement time, but having worked for many years in a lot of these deals in the background, they don't get done in January, right? They just get announced in January. So I think there was deals. Now, it's true that in 2020, the total amount of those very large deals probably was a little bit lower, right? But as you see, again, I call people to look at the overall picture, right? We have money flowing in very different channels. We have a great increase in the number of deals that include co-development and JVs. So also different methods of sharing value, even by the traditional acquirers like Pharma. And again, Josh, it's about 200 billion that probably is sitting as dry powder there. So, let's see how it plays out. But I wouldn't say that if you have a fantastic proposition, these days it's, you necessarily have to be bought by somebody. I think there's many different paths.
Fantastic. And yeah, we're running out of time here. Obviously, I've got to hop on for our next live session starting at 10 o'clock. So I think maybe one last question. Please do keep your questions coming in, though. Both Jorge and Alexandra and the McKinsey team, very happy to answer them in the chat and Q&A section to the right-hand side. Please do visit them at their booth, and indeed all of our other partners is another way to engage and connect with them. But I guess one final question to round us off, which I think the one that sort of seemed most sort of suitable for this particular topic was from Mel Walker. He said, what are your thoughts on how actual market performance of products, which, as you mentioned, is often below expectations due to challenging market access, and which will get more challenging in the post-COVID world, on future asset and company valuations? So what are your thoughts on the actual performance of products which might be going through challenges on future asset and company valuations? If you think you can.
Yeah, so Alex, please chime in as you feel free. Very briefly, I know we're very much against time, but to Mel's question, the simplest answer is, at least from my experience, my perspective, is make sure, right, that you are building to launch successfully, right? Don't just develop and get it to the regulator. And I think investors are getting savvier and savvier about, do these guys, are these guys looking at the price points? Are these guys looking at sustainability from a healthcare system perspective? Are these guys bringing the people in? Do they have somebody in the board that helps them as founders, right, to develop that muscle as well? So think about it and make it part of your plan. I think that will go a long way in terms of people understanding the difference between somebody that has just, okay, let's go and launch. I mean, I'm simplifying things, right? But somebody that has already designed phase one, right? With a view to show something that will have from an access perspective, but also from a positioning perspective. We hear about all these mega blockbusters that apparently are miraculous and have no faults and just grow forever, blah blah blah. But then when you actually spend time looking at market data, you realize that these products do not serve every patient the way that is being said, right? And how can you use the analytics and that data to drive the decision on your primary endpoints, et cetera? So marrying this development with the commercial ability and showing that you can do it, that you have the people internally, I think goes a long way in terms of investors, but also in terms of those that acquire your development program, because they know that is set for market.
Anything at all to add there, Alexandra, before we sign off?
No, I think my last addition on that is perhaps that what the biotechs are actually planning for if they launch themselves. I have little money and I need to manage to launch with little money. I think that's probably not the right path for future. The right path is like, look, what do I need to make this successful, and when do I need to invest what, and almost like starting think big, and then figure out like how do I get that financially done rather than the reverse.
Fantastic. Well, as I mentioned before, please do keep your questions coming in. I'm sure Alex and Jorge will be very happy to connect with you all. It seems there's a lot of chat going on around that talent issue that you mentioned as well. So please do keep that conversation going. We're back in 10 minutes live here for our Asian investment focused panel. But for now, thanks hugely to Jorge and Alex. Always such content-rich presentations with so much insight. So always a great way to kick us off, as you did in November and again today. So thanks again, and see you all at 10.